What's up everyone, it's Scotty with MoneyVest. Markets here continue to slide lower with the Dow Jones here dropping over 1.2%, the S&P 500 also down over 78 basis points, and the NASDAQ also selling off down about 70 basis points on the day. It is really important for me to address this message, and that is opportunities are coming our way. Patience will prevail like it has always in the past. And that's exactly why we need to be very much aware of what's going on in the market and also be very much ready for when the opportunities do come in front of us, we are able to deploy cash and take advantage of those opportunities. So I'm going to be going over our MoneyVest index in a little bit more detail today because we have now traded back down to under 4, as well as the markets continue to slide lower, down about 2 to 3% from their all-time highs. Again, nothing like a crazy number, but it's still a beginning of a small dip so far is what we've experienced, and that could turn into a pullback of over 5% or even a correction of over 10%. So hope you all enjoy this video, find it helpful. Make sure that you drop a like and don't forget to subscribe to the channel. I would really appreciate that, and links to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the members only videos as well as all the trade alerts, and of course more importantly our MoneyVest platform, which went live in just about 2 weeks ago, and we've already had over 5,000 visits on our Patreon and our website. So links going to be down below if you're interested in joining. There is a 51% discount that does expire at the end of this month. So in about 2 weeks the 51% discount is going to go away, and unfortunately the prices are going to go up because we do have a lot of data fees that we're paying annually to New York Stock Exchange, NASDAQ, to basically get this data for you guys so you can pretty much do full fundamental comprehensive analysis on individual stocks. And we're going to be adding a lot more features, including our very own macro dashboard, the earnings and economic calendar, portfolio tracking, and a lot of other features as well. So links going to be down below. We'd love to have you on board. Again, you can play around with these numbers, visualize a lot of the data points on charts so that it's going to save you time to analyze different companies. In fact, one of the users also did mention that it's saving them time of analyzing stocks by 2 to 3 times. So that's also going to be available, and we'd love to have you on board. So first things first, let's get started here. The market's obviously selling off. We had the Dow Jones dropping over 1.2%. The S&P 500 down about 78 basis points. NASDAQ down 70 basis points as well, just shy of 17,900. And this right here was the advancer versus decliner stocks. Majority of stocks were selling off, a little bit over 4,490, and only 1,200 companies pushing higher on the day. So of course the markets were down. My portfolio was down about $2,900 or almost $3,000 of unrealized losses on the day. Again, that's part of the journey, as I've mentioned before. There's been green days, there's been red days, there's been more green days, and there's been fewer red days, but these are the fewer red days that we have to also understand are part of the game, and is going to happen. Inevitable situation, because if you're investing in the markets, there's not going to be a circumstance or an environment where you're always making a profit, where always going higher, portfolio just never goes down. That's going to be in a very, very, very rare situation, I would say. Like it's almost impossible, right? That's going to happen. I say almost because anything is possible in the market, but the probability of that happening is like less than 0.0000001%, right? So you're going to incur either realized or unrealized losses in your investing journey. It's part of the game, and something that we have to all be aware that it's going to happen. It's inevitable. Now, this is really where I want to sort of hammer down on, and something that I want to spend more time, because this has proven to be a very, very successful number in my opinion, and something that I've experienced myself. Every time I've looked at the MoneyVest index as a index that's going to tell me exactly where the market top or the bottom is, it's failed, right? It's not an index that's going to tell you where the market top or where the market bottom is. It's not a timing indicator. It's not a signal that's going to tell you exactly when to buy or when to sell. But instead, when I look at that number, and I'm going to go over why that number is so important, not just that 3.82 number, but the number in general, the MoneyVest index, why it's so important, is because it's a combination of a lot of other technical indicators that we've utilized over the years, right? Over the years of our investing and trading, it's a calculation of a lot of those indicators that have proven to work with respect to the S&P 500. We're not talking about the NASDAQ here. We're mostly talking about the S&P 500 when we're referring to the MoneyVest index. And this number has come from 4.17. So 2 days ago, this number was at 4.17, came down to 4, and now we're sitting at 3.82. And we're still in the red zone. So this is a color-coded number here. So we're still at 3.82, which is, again, going to be in a bit of red because we're closer to 4 than we are to 3. And the moment it dips below the 3 level is, I believe, the moment it dips below 3.5 is when it turns yellow. And the moment it dips below 3, it turns green, right? So that number under 3 is going to start showing up, lighting up in green. And that, again, is not a straight up signal that it's a buy, markets are a buy, none of that. It's essentially telling you, and this is how I use it, is that the risk reward in the market is now a lot more favorable than what it was, say, a few days ago or a few weeks ago. That's it. The only thing it's telling you is how good the risk reward is in the markets, right? So the lower this MoneyVest index goes, the better the risk reward becomes in the market. The more oversold the market becomes, the more valuations are coming down, the better the opportunities are, the more discounts you're seeing. It's not telling you that the moment it crosses below 3, the markets are bound to go back up. No, it's not a timing indicator. It's not a timing signal. It's not signaling you for a top or a bottom. It's only referring to the opportunities in the markets on the way down. And I say on the way down because it's got its limitations, right? Because no index or signal in the world is going to be perfectly telling you exactly where the top is, where the bottom is, and how to time the market, right? Those things are just never going to exist because markets are so interesting. They're just such a chaotic environment because there's so many people involved and so many banks and households and retails and institutions and hedge funds and algorithms and computers involved that it's never going to be able to no algorithm or no formula is going to be able to capture all of that. So it's got its limitations. The MoneyVest index has its limitations. And one of the limitations that I have or basically I see is that I'd never use it as a sell signal. I may use it as a indicator to help me understand when is the risk reward favorable and when I can start deploying cash and start dollar cost averaging and essentially buy, but I never use it as a sell signal. And although the opposite is also true, that it's the higher this number is, the more unfavorable the markets are, the more unfavorable the risk reward is, and the valuations are, let's say, at an extreme. Technically speaking, we're overbought, but I don't use that to sell stocks or to de-risk and get rid of my positions. And the reason being is because my markets can remain overbought and overextended longer, right? Then they can remain oversold and technically getting sold off, right? So technically just staying at really, really low levels. So historically speaking, in other words, markets can remain irrational to the upside longer than you can remain solvent. That's exactly why shorting the markets have never been a successful strategy on a consistent basis. It's worked out on a one-off basis, but it's never been a consistent, successful strategy. That's exactly why the way I look at MoneyVest indexes, okay, the lower this number gets, the better the opportunities are for me to buy into the market and for me to dollar cost average and deploy cash, and only from a buy signal standpoint, not from a sell signal standpoint, because markets can remain overbought for a significantly long period of time. RSI can stay overbought for months, even years. It can continue on this bull market. So it doesn't help me to simply look at that index and just sell, right? This is how I use it. This is, I think, how it's going to be the most useful for us, for everyone, for all of our community members. And you'll notice that historically the best buying opportunities have come after the index has dipped below 3, and 2 to 2.5 would be best, and 1 would be no-brainer. Take out another mortgage and buy into the market type no-brainer because, again, historically we've seen it's performed really well. I've kind of back-tested this with very, very nice high success rate. So keep a close eye on where we are. And again, we're starting to see a bit of a pullback in the market breadth here in terms of the percentage of stocks trading above or below their 200-day moving average. You'll notice that we're now down to 76.5. We were, of course, trading as well over 80%. So 4% of the stocks are trading now back below their 200 SMA. So we did see a bit of a sell-off inside this red rectangle, as we discussed in our previous videos. And this right here is, again, another index. That's the percentage of S&P 500 stocks trading above their 50-day moving average. Also started to show some signs of a pullback here after hitting that red range again, coming up to overbought levels here in the market. So nothing to be afraid of, nothing to go crazy over. It's only going to be giving us buying opportunities in the market as time goes on and as they continue to come down. So Netflix reported earnings beating expectations as ad-supported memberships rise at 34%. So they actually reported some pretty stellar numbers. 488 is going to be that earnings per share versus 474. And revenue coming in just over $9.5 billion versus $9.53 billion expected. And total memberships, 277 million globally on a paid basis versus 274 million expected. So beat on all three accounts, with revenue up almost 17% year over year to over $9.6 billion. And Netflix is now expecting a full year reported revenue growth of 14 to 15%, a slight minor increase from their previous guidance. And the company reported net income of over $2 billion or $4.88 versus $3.29 same time last year. And that is also a very significant increase on a year-over-year basis. And global paid memberships also grew 16.5% to almost 278 million. And this marks one of the last updates Netflix will release regarding its subscriber growth. So very strong numbers, getting us started on the right foot. Although the numbers were good, I don't think Netflix actually went higher after hours. If you come over to Netflix, on the 4-hour chart, I believe it basically was flat. Yeah, so $642 is where it ended up closing. It was selling off quite a bit, down to $599, so $600, and quickly recovered back to over $600 a share. So Meta had a very nice day, up over 3%. Some semiconductor stocks like NVIDIA, Broadcom, Texas, ADI, Intel were pushing higher. Tesla was basically flat as well. Amazon selling off, continues to see some weakness. Apple also down over 2%. Google down almost 2%. Eli Lilly down over 6%. Microsoft selling off over 71 basis points as well. So quite a bit of a pressure on the selling side for a lot of these big tech stocks continues, with some of them, someone holding up better than others. But overall, we continue to see some selling pressure in technology. All 11 sectors were red except for energy, which was still higher. And in the last 1 week, again, a bit of a mixed market with financials, real estate, industrial, energy pushing higher, with everything else selling off. And in the last 1 month, we've got most sectors green except for technology, which is down about 1.3%. Cocoa prices, lumber prices, soybean all pushing higher, with coffee, natural gas, silver, live cattle, and sugar selling off. Bitcoin just over 64,000 and Ether just over 3,400 as well. Now coming over to IWM, so this right here was a bit of a pullback on small caps as well after a huge breakout, and of course getting a bit more on the overbought side. You can see how extreme it had gotten at over 80, and again the L3 Banker Oscillator also had a huge pump in this entire index here. A lot of liquidity flooding into this index, and as a result we're seeing a bit of a pullback, which again is very normal for this index, for this ETF. Next support is going to be down as low as $209, $210, and the next target resistance at close to $233 for IWM. Now coming over to, again, the MoneyVest index, we're at 3.85. A more precise calculation puts us down to 3.83. So again, we're in and around those levels. Keep a close eye at 3.5 or lower, down to as low as 3 or lower, because those are going to be very important levels where we can start dollar cost averaging and start buying into the market, because the risk reward is going to be very, very favorable for us. So moving forward to individual stocks, and before we get there, volatility is on the rise. I mentioned this in our Discord. It's time to get going, get your cash ready. VIX is high, up over 10%, almost 16. And the next level we're going to be watching is going to be over here between 18 and 20 for the volatility, all the way up to as much as 23 on the VIX, to as much as 36, 37 for the volatility as well. So keep a close eye on some of those levels here. The first buying opportunity for us is going to be coming up very soon at 18 to 20 levels for the volatility, at which point the MoneyVest index is going to be closer to 3 at that point. So again, get ready. This is your message. This is your opportunity. This is literally my video to get ready. A lot of people tell me that, Caddy, you're always bearish. You're always talking about the markets going down. You're always talking about overvaluations and over technicals here, that being overextended. No, it's just understanding where we are, what part of the market cycle we're in, how well positioned the markets are. I will tell you exactly when the opportunities are there. I will tell you, like, good guys, it's time to buy, it's time to deploy cash, it's time to put money to better use and to start looking at opportunities. But I'll also tell you when the risk reward is not that great, right? So just be a little bit more cautious, be more careful, as we did, a couple days ago, talking about how the markets were overbought, overextended. Apple, Amazon, I mean, all big tech stocks were overbought. They were just ripe for a bit of a pullback, and that's exactly what we're seeing at the moment. And the volatility, of course, was really, really low at a really rare percentile, and we're starting to see that move back higher. So it is normal occurrence. It's just a part of the market cycle, and over time, we're always going to have better and better opportunities because the markets are functioning in that manner, almost always. Now, coming over to individual stocks, and before we get there, S&P 500 here on the daily chart starting to roll over a little bit. Again, RSI, MACD starting to show signs of some weakness. I don't know why this chart is not populating here, so let me just show you guys over here. So again, RSI is coming down to 54.66. This right here has been the reasonable uptrend for S&P 500 if I were to kind of mark out. That's going to be the higher low. I wouldn't be surprised if the S&P does come down to like 5,500 to 5,450. I think that would be a very reasonable sort of support and area of demand for the S&P 500. But this right here is a very nice uptrend to watch for S&P 500 and a reasonable support, in my opinion, right here at 5440, kind of aligned with this previous support where we were consolidating sideways for some time before finally pushing higher to new all-time highs. The NASDAQ also RSI 48.99, so continues to sell off. Some people would argue that we're starting to see a bit of a breakdown, or we're already there at a very strong support, as this is the short-term uptrend for the NASDAQ as well, of higher highs and higher lows. And a much stronger support, in my opinion, is going to sit right over here at 17,500, kind of aligned with that previous support where we validated before pushing higher to new all-time highs. And right now we're starting to come back down, and that would be a reasonable next support to watch for the NASDAQ. Talking about Apple here, and Apple also coming down, as you can see that it was incredibly overbought. RSI was well over 78, closer to 80. So I think it's very normal for us to see a bit of a pullback, and support level is going to stay put right over here at low 200s, $206. Maybe another support considering this previous resistance. So it consolidated sideways here before breaking out to new all-time highs. So those right there are going to be a couple support levels to watch for Apple at the moment. And again, if I mark out for a bit of a higher low, this right here is going to be that ascending support level to watch, and the confluence really puts us at around 218 down to as low as 207 for Apple. Talking about Amazon here continues to get rejected at the $200 per share level. So this right here, massive resistance for Amazon, not able to successfully break out above this level. And in my opinion, a much stronger support is going to be sitting right over here at close to 174, 175. Wouldn't be surprised if Amazon actually trades down to that level, considering the RSI is also coming down to 38, coming to pretty oversold levels. But that right there is going to be that level at close to 174, 175 for Amazon, kind of aligned with that previous double bottom support for this company. Talking about Tesla, and Tesla here still struggling to break out above the $200 range. So we got a huge resistance in and around these levels here. That's exactly what we have discussed in our previous video. There's a massive amount of supply for Tesla, between $265 to as much as $300 a share. But also, if you could take a look at the chart itself, it's really consolidating sideways. So maybe someone could make a case on the 30-minute time frame that it's really coiling in for a potential breakout, which could come in at any time and could charge us higher above 265 or higher. But this right here really is the consolidation, and what we're seeing from Tesla, just a lot of sideways action. Not really a lot of volume, but a lot of sideways action. Of course, after rallying and ripping higher to over 250s, it's really just trading sideways, and it's not able to absorb all that supply and that resistance from 260s at the moment. Talking about NVIDIA, and NVIDIA here continues to manage that support. If you come over to here, this analysis, you'll notice that this right here was the support that we talked about, and right now NVIDIA is very well validating that at the moment. So this right here is the area of consolidation. Support level is going to stay put at 118, resistance all the way up to 139, 140 for NVIDIA, and that right there is going to be that support level to watch for the company. Talking about Advanced Micro Devices and AMD, let's just come over to this chart, and Advanced Micro Devices also has been rolling over a little bit. Resistance going to stay put at 184, 185, getting rejected in and around those prices. Support level is going to stay put roughly down to 150 for Advanced Micro Devices. So that is going to be that support. Resistance is going to stay put at 184 for the company here. Talking about PayPal, I did a video on PayPal, so make sure that you do check that out as well. A lot of consolidation sideways in that range between that support and resistance. That's going to be staying put at $57 with a resistance and targets back up to 65, all the way up to as much as $68, $69 per share to as much as $76 for PayPal. So a lot of consolidation sideways For PayPal, it's sitting right at $60 a share, right on dead point 60. Support level is going to stay put at $57 with a resistance at 65, like I said earlier. And coming over to Visa, it has seen a nice recovery back higher. Support level is going to stay put at 266 with a resistance all the way up to 282 for this company. Meta here also did recover a little bit well, coming back down to that area of support and that area of demand. At the moment inside this green rectangle, resistance and targets back up to 515 to 531 for Meta. And again, we're seeing a lot of consolidation, a lot of support, and that area of demand, area of support for Meta is going to stay put right over here. We're seeing a lot of consolidation in that range for Meta at the moment. Talking about Netflix. Netflix we already discussed a little bit earlier, but no changes after hours after the earnings. Support level is going to stay put at 638, 640 with a resistance all the way up to as much as $702 for Netflix here. Google also has been showing signs of weakness, starting to come down. Not a surprise. RSI MACD also showing signs of some weakness here. Support level is going to stay put at 174, and I wouldn't be surprised if it actually does end up trading down to 150s, but that would make for a very good deal for Google because it would be in a bear market down over 20%. So first support level down at 173, 174 for Google, and Microsoft also coming down. Same exact story. It was overbought at 460s, down about almost 7%. First support level sitting at 432, all the way down to $417 to as much as $393 for Microsoft as well. So those right there are going to be a couple support levels, couple levels to watch as an area of support for this company. Coming over to Enphase, so ENPH, and Enphase here also starting to sell off down almost 3%. Really just consolidating sideways in that range, and this green rectangle is going to be that area of support, sitting roughly in the low 100s and all the way down to $92, $93 per share, with a resistance and a target all the way up to 138, 139 for Enphase. And then finally, we come over to Costco, which also is starting to show some signs of weakness. And this right here was the support level that we talked about in our previous video. Starting to see a bit of a breakdown. Next support level is going to be down at 787, down to as low as 747. And Costco, again, as I mentioned earlier, is seeing a bit of a negative divergence, which would more likely lead it to somewhat of a breakdown below 839, potentially down to 785. So hope you all enjoyed this video. Found it helpful. If you did, make sure you drop a like, and don't forget, buying opportunities are coming our way. Keep a close eye on the MoneyVest Index. It's actually going to make its way over to the platform eventually. We're gonna make it available on the MoneyVest platform under a macro dashboard. So again, links going to be down below if you want to join, be a part of our MoneyVest community, and get access to a 51% discount available until the end of this month. Unfortunately, after this month, that discount number is going to come down a little bit to closer to 40 to 45%. And as we're adding more features, the discount is going to come down over time. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like, subscribe to the channel. Happy investing. I'll see you all in the next video.